Are you struggling to get approved for online loans due to bad credit? In this video, we'll share some expert tips and strategies to help you increase your chances of getting approved for online loans in 2025, even with poor credit. From understanding credit scores to finding the right lenders, we'll cover it all. Watch until the end to learn how to overcome bad credit and get the loan you need. Whether you're looking to consolidate debt, cover unexpected expenses, or achieve your financial goals, this video is for you. Join me as I take on the challenge of getting approved for online loans with bad credit in 2025. I'll explore different lenders, test various strategies, and share my experiences along the way. Online loans have become a lifeline for many people seeking quick and convenient financial solutions. With just a few clicks, borrowers can apply for funds without the hassle of traditional banks. However, for those with bad credit, the process can feel like an uphill battle. A low credit score often carries a stigma, making it seem impossible to get approved for a loan. Many lenders view bad credit as a sign of financial instability, leading to higher interest rates or outright rejections. Many people believe that having bad credit automatically disqualifies them from getting a loan, but this isn't entirely true. While a low credit score can make the process more challenging, there are lenders willing to work with borrowers who have less than perfect credit. One common misconception is that all lenders check credit scores the same way, but some focus more on income, employment, or banking history rather than just the credit score itself. Another widespread belief is that bad credit loans always come with outrageously high interest rates. While it's true that interest rates tend to be higher for riskier borrowers, not all lenders exploit the situation. Comparing offers from reputable lenders can lead to fairer terms and manageable repayment plans. People often assume that applying for multiple loans will improve their chances of approval, but this strategy can actually harm credit scores. Each application results in a hard inquiry, which can lower a score and make future approvals even more difficult. Instead, researching lenders and pre-qualifying without a hard credit check is a smarter approach. One of the biggest challenges individuals face is the fear of rejection. Many hesitate to apply because they assume no lender will approve them. This fear prevents people from exploring options that might actually work in their favor. Another major hurdle is predatory lenders who target desperate borrowers with unrealistic repayment terms, hidden fees, and high penalties. Recognizing trustworthy lenders and reading the fine print is crucial to avoiding financial traps. Securing financing with bad credit isn't impossible, but it does require patience, research, and the right approach. Understanding the realities of the lending process helps borrowers make informed decisions and find solutions that fit their financial situation. In 2025, online loan options have expanded, providing more opportunities for individuals with bad credit to access funding. Many lenders now use alternative methods to assess creditworthiness, making approval possible even for those with low credit scores. Traditional online lenders still dominate the market, with some offering personal loans specifically designed for borrowers with bad credit. These lenders may consider factors like income, employment history, and banking activity instead of focusing solely on credit scores. Some well-known fintech companies and peer-to-peer lending platforms have also adapted to serve this market by connecting borrowers with individual investors who are willing to take on higher-risk loans. Credit unions and community banks have also stepped up, offering more flexible loan options for those with financial struggles. Unlike large banks, these institutions often consider a borrower's relationship history, financial habits, and overall ability to repay rather than just a numerical credit score. Alternative borrowing methods have gained popularity as well. Payday alternative loans, offered by some credit unions, provide small dollar loans with lower fees and better repayment terms compared to traditional payday loans. Buy now, pay later services allow consumers to make purchases and spread payments over time without high interest rates, making them a useful option for short-term financing. Secured loans remain another viable option, where borrowers use assets like vehicles or savings accounts as collateral. These loans typically come with lower interest rates since lenders have a way to recover losses if payments are missed. Additionally, some online lenders now offer income-based repayment loans, adjusting payments based on the borrower's financial situation, making them more manageable. Online loans are a convenient way to access funds quickly, but having bad credit can make approval difficult. Many lenders use credit scores to assess risk, and a low score may lead to higher interest rates or rejection. However, not all lenders rely solely on credit scores, and some specialize in bad credit loans. Not all online lenders have the same requirements. Some consider alternative factors like income, employment history, or even bank transaction history. It's important to research lenders that specifically cater to borrowers with bad credit to increase the chances of approval. Each lender has different eligibility criteria, such as minimum income, employment status, or residency requirements. Reviewing these conditions before applying helps avoid unnecessary rejections that can further impact your credit score. Lenders typically ask for proof of identity, income, and banking details. Having documents like pay stubs, tax returns, or bank statements ready speeds up the application process and increases approval chances. Some ways to boost approval chances include applying for a lower loan amount, providing collateral if possible, or adding a cosigner with a better credit profile. Some lenders also look favorably at applicants with consistent income and low existing debt. Once the right lender is found, the next step is submitting an application. Many lenders provide instant decisions, but some may require additional verification. It's crucial to fill out the application accurately to avoid delays or rejections. If approved, it's important to review loan terms, including interest rates, repayment terms, and any hidden fees. Comparing multiple offers ensures finding the best deal that suits financial needs without unnecessary costs. After accepting a loan offer, the funds are usually deposited within 24 to 48 hours. Making timely repayments helps rebuild credit over time, opening up better loan opportunities in the future. Securing an online loan with bad credit requires a strategic approach to improve approval odds. Choosing the right lender is essential, as not all financial institutions have the same criteria. Some specialize in bad credit loans, focusing on income and financial stability rather than just credit scores. Researching and applying with lenders that cater to borrowers with poor credit increases the chances of success. A strong application makes a significant difference. Providing accurate and complete information, including proof of steady income and employment history, reassures lenders about repayment ability. Lowering the loan amount requested can also increase approval chances. Lenders are more willing to approve smaller loans for borrowers with bad credit, as they carry lower risk. If possible, offering collateral such as a vehicle or savings account can turn an unsecured loan into a secured one, leading to better terms and a higher chance of approval. A cosigner with a stronger credit profile can be a game changer. If a trusted friend or family member is willing to co-sign, their creditworthiness reassures lenders, making approval more likely and potentially lowering interest rates. Pre-qualification is a valuable tool before officially applying. Many lenders allow borrowers to check their eligibility without a hard credit inquiry, helping to avoid unnecessary credit score drops. This step provides insights into potential loan offers and helps focus on lenders that are more likely to approve the application. Timely payments on existing debts, even small ones, show financial responsibility and can positively impact approval chances. Reducing outstanding debt and improving debt-to-income ratio signals to lenders that the borrower is managing their finances better. These strategies help navigate the online lending process more effectively, making it possible to secure a loan even with bad credit. With the right preparation, research, and financial adjustments, borrowers can increase their chances of approval and secure better loan terms. I'd love to hear your thoughts. Have you ever applied for an online loan with bad credit? What challenges did you face, and what strategies worked for you? Drop a comment below and share your experience. I'll be reading and responding. If you found this video helpful, be sure to check out my other videos for more financial advice, tips on improving credit, and smart money strategies. Don't forget to like, subscribe, and turn on notifications so you never miss an update. See you in the next one.